2023, would you even consider buying a property in 2023? Sure, if you need to buy a home and you need somewhere to live, it might make sense for a lot of people, but would you consider buying an investment property in 2023? In this video, we're going to review some potentially niche properties that might still perform in 2023 and beyond. This is not an investment advice video. It's just, if I was investing in real estate next year, these are where I would look for potential opportunities. There is a huge amount of uncertainty in many sectors at the moment. You have stock prices which are down. Even crypto is now more linked to the financial markets. That's also down. Tech stock is down. And some housing markets have also started to fall. Property markets generally tend to lag about 6 to 9 months behind the financial markets. But will that hold true this time? Will we see that actually happening in 2023? Will property prices fall in 2023? And if they do, some investments are going to be safer options than others. Generally speaking, in times of high inflation, many investors generally turn to hard assets, and property can be seen as a hard asset. It's a hard asset that also generates income, which can protect many investors against inflation. Therefore, many investors will look to the real estate market to protect themselves against inflation. But in many countries, including Ireland, governments have introduced things like rental caps on residential properties, which impacts the overall long-term value of the property if the rental cap is lower than the inflationary rate. So if you do rule out residential because of the rental caps, or you're getting out of residential because of the rental caps, where is a safer place for your investment in terms of real estate? A few years ago, I was quite bullish in terms of my advice on where to invest in terms of industrial and build to rent, and those markets performed quite well over the last few years. I was very bearish, like the rest of the market, in terms of retail. My views have slightly cooled in terms of industrial and build to rent. Build to rent because of the rental caps, and industrial, I really think the yields and the rents have capped out to a kind of a near max value at the moment. It's hard to be bullish on any real estate sector at the moment, but uncertainty does create opportunities, and I believe there will be plenty of opportunities in 2023, and perhaps there could be great opportunities in some niche properties. And I do think it's a good idea to keep an eye on these markets because you might be able to grab some great deals. No one really wants to invest in retail at the moment, and it's very clear why. Everyone can see that retail is moving online, and the demand for retail stores, particularly on High Street, is dropping. There is lots of vacant units, and generally demand for retail is down. But while everyone wants to get out of retail or doesn't want to invest in retail, this does create some opportunities, because right now I think the market for retail in terms of yields is the highest I can remember in my career, and that is going to create some opportunities. As a whole, I believe the market is going to suffer over the next few years, and some locations may not recover at all. But some retail will be needed for years to come because not everything can move online. So if you can identify these types of units and these types of locations, they will provide a very attractive yield at the moment because the overall market is down. Think about neighborhood centers in large residential areas. Think about retail units that can be used for your local corner shop or your barber or hairdresser, etc. There will be a lot of retail that is service-based that there will still be a need for in the future, even if everything goes online. And those services are going to be needed even more so out of town when everyone is working from home. Neighborhood centers will become more and more important in high residential areas. And as build costs are so expensive at the moment, it's hard to see that much new retail will be built anytime soon. The next niche market to consider would be healthcare, regional healthcare units. Healthcare tenants like doctor surgeries, pharmacies, etc. tend not to relocate all that often, and some medical use leases are linked to CPI rent reviews, so inflation can be your friend in terms of increasing the rent. And also, a lot of medical uses can be actually guaranteed by the state as well. Build costs for such units aren't going down anytime soon, so therefore building more in some of these locations will be very slow. Some healthcare units and healthcare leases can provide protection against inflation, as well as providing a long-term steady growth of your capital. Other important factors to consider would be location, the growth of a town, as well as the lease itself. The next niche market to consider would be assisted living or complexes or facilities that are geared for the elderly. Ireland, like many developing countries, does have an aging population, and that sector is massively underserviced in Ireland. The over 65s are the fastest growing sector of the population, and any operator that is targeting to facilitate that market, including assisted living or even facilities to help that sector of the population, will gain in considerable demand over the next 2 decades. The opportunities within the sector will be extremely limited, but if you are able to source a property that is focused on this market, you can be sure that there will be considerably more demand for that property over the next 20 years. The last one is a little bit of a long shot, but worth considering if an opportunity did present itself. Some commercial leases for restaurants and bars sometimes have a turnover element to their rent. So rents generally might have a baseline, but they might have a top-up payment based on turnover. A recession may slow some people going out to some of these bars and restaurants, but if it is a good bar in a good location or a good restaurant in a good location has a good trade, inflation will actually drive up their prices and will also ultimately drive up their turnover figures, which would create an opportunity to help keep the rent in line with inflation over the next few years and help prop up that value of the property. 2023 will be a year of uncertainty, which will create opportunities for those that have capital and are willing to capture some good deals. Investing in commercial real estate is more complex and generally does need more capital to start, but I'm hoping to change that in 2023. Rental caps kill residential investment in times of high inflation. Commercial properties tend not to be impacted by rental caps unless it's written into the lease. And some niche commercial properties may perform well in times of high inflation, or at least just keep up with inflation. I do think 2023 is going to be an interesting year full of ups and downs, so make sure you do subscribe to the channel to see how it all turns out. As always, thanks for watching.